Hi everyone, it's Evan from the Trade Risk on Wednesday, June 24th, here with a market recap video. We're going to look at the current state of the market. We're going to look at some leading and lagging sectors, get into some other markets, and then some trade ideas for the remainder of the week. So we'll jump off into the SPY here, and you can see not a very pretty session for the bulls, down 74 basis points today, firmly closing on the lows and back into this same old range that we've been talking about pretty much all of this year. So 212.50, that is still the upside nut to crack for the bulls. I think that would get a lot of people excited. That would get me excited on the long side. Until we get that, it's still kind of a 1 foot in the door, 1 foot out the door. We do have sectors that are breaking out. We have sectors that are lagging. So again, it's still sort of a mixed bag. I try to look at this market with a glass half full mentality, just because of the sort of aggressive sectors that are breaking out, the small caps, the biotech, the type of risk on appetite that you like to see, financials leading. So those are some great sectors to see leading and breaking out. The SPY, remember, kind of encompasses a very wide range of sectors, you know, from energy that's lagging, rate sensitive sectors that are lagging. So you know, it depends on how you look at this market. Again, there continues to be opportunity on both sides. For me, you know, closing on the dead lows here back in this range, this gets me pretty neutral. Again, I think stock selection, sector selection is very important right now. And you know, I understand there's you know, the session today could be due to Greece, could be due to, you know, you name it, and that is basically all irrelevant to me. I think the price action just speaks to everything. So, you know, I know a lot of people say, well, when the Greece resolution happens or whatever becomes of that situation, the market will rally, and very well could be the case, but we don't know if that could take another day, 2 days, 2 weeks, 3 weeks. You know, so that's why we kind of look at charts here and just try and analyze price itself. So the SPY, again, not too exciting to look at here. It needs to get back above 212.50 in my opinion. That's the real breakout level to watch. IWM, let's move there. You can see, again, the recent breakout ever since basically last Thursday is still very much intact. Today was the first red candle since then, and it's still closed above the 8 EMA. So again, still a lot of strength, uptrend. Even the short-term accelerated trend here has barely been negated. So look to tomorrow. Let's see if there's some follow through to the downside. Let's see if the bulls step in here and just buy the first dip that they can. Otherwise, for now, this still looks really good. Moving on here, Qs. Again, a little bit of a pullback, closed on the lows, needs to get back above 111. Similar comments here as the SPY. It's more so consolidating at the top end of this range, so a little healthier from that perspective, but again, still closing on the lows, still effectively range bound until it can take out this cluster of highs dating back to mid-April. So again, leading sectors continue to be biotech. Of course, they got hit today, down 1.5%, but still closing above the 8 EMA. Still a lot of short-term momentum here on the upside. So again, let's see if there's some continuation tomorrow. Let's see if the dip buyers want to get in just off of this first down candlestick. Healthcare, actually consumer discretionary, continues to break out too. Another leading sector, pulled back again today. So let's see what becomes of that. Healthcare pulled back again today, still was a leading sector. And then financials, a little bit more of a give back here, kind of getting a little messy. So really, you know, 25.10 was the breakout level from earlier this year. You want to see, you know, these highs now, 25.25 reclaimed if you're looking at the financials. But, you know, again, still a strong sector overall. Let's get into some other markets. TLT, not too much has changed here. Looks like it's trying to carve out a bottom. Some significance right here, right around this 116, 115 and a half level is holding as support so far. Then you have a bunch of overhead recent supply here to contend with. So you got to get these fast moving averages curled up, going the other way. Right now they're still heading down, so you're still going to have that pressure on the bond market. So let's see what happens with that. USO continues to hang out pretty tight. We're still waiting on a signal one way or the other, either roll over or breakout continuation of this move since mid-March. I'm watching that one very closely now because it does have my interest. UNG, still kind of a larger, longer term bottoming pattern here. It seems from a long term or at least intermediate term perspective, doesn't look too actionable to me one way or the other. The gold and silver, both sort of the same here too. Long term basing patterns, perhaps. Let's see which way they resolve. Still nothing too actionable for me there. Now, getting into some individual names, we'll start off with Apple, and it had a real nice session. Looked like it was really going to get going. Got all the way up to almost 130 today before reversing and closing. Still up, outperforming nicely, almost 1% on the day. So I think Apple, tried to make a move today. This looks like it wants to hold this trend line yet again. I tried to take a short on this day right here last Friday, and it was quickly stopped out on Monday as the previous days on Friday's action was negated essentially. So back to sort of the drawing board here. Great that Apple tried to push today. Let's see if it can continue again. 130, I think, is a bigger level that it needs to eventually take out. But for now, certainly looks like it's trying to hold itself together right here. So keep that one on watch going forward. Google has taken out this 555 level and is just hanging up above the fast-moving averages. So just sort of flagging around, it looks. Could offer a nice opportunity if it can take out basically today's highs or yesterday's highs for sure. 563 to 565 area looks like that one could get Google going again. Netflix, of course, we had the news today on the reverse split. I think there was some Carl Icahn news rumors that he's out of this. I'm not really sure about that one, but a little bit of a reversal today from the early morning pop, but still tremendous strength here in Netflix, so wouldn't want to fight this. Let's see what becomes of it, but still not too much of an actionable signal in Netflix just yet. Amazon cooling off a little bit today. Had a really nice session yesterday. Again, this one's above all the fast moving averages. It's taken out most resistance, not quite all-time highs. That would be right here from its post-earnings day. So let's see. Amazon still looks good. Let's see maybe if we can get another day of sideways. Maybe we'll get a trade back above 445 for a long entry, but we'll have to see how that one holds out. Now, Facebook has been a monster move here this week so far. We've been lucky enough to take advantage of it inside of the trade risk premium service. We got long it on Monday, which again felt even at that point sort of extended, felt like we were chasing just a little bit, stressed the importance of position sizing even when we got involved here at 84.71, but really we just have seen acceleration since that point. We've sold most of it off at this time, took a fourth off 3 times, took a piece off again today, lucky enough at the highs. So got a little bit left on it. Let's just see if perhaps we can get a sale up around $90. We'll see. If it wants to cool off tomorrow, then so be it. But Facebook certainly strong. It's accelerated on this trend. Take a look at the weekly chart. You can see with this nice acceleration to the upside. So it certainly looks like this is in play now on the long side, up 7.75% on the week so far. So let's look for this one to settle out, maybe go sideways. We'll get another entry in it. Facebook for now looks really good on multiple time frames. Twitter, not doing too much, needs to get back above $36. I think that's a critical level for it. It's still struggling. First attempt up at this level, tried to hang tough. We'll have to see if it can still hang here and then make another attempt at it, but I'm not seeing too much. I like that the moving averages are starting to flatten out, so it's trying to, at least in the short term, get constructive, but I still don't see it just yet in Twitter. GoPro, This one is starting to put in a little bit of a consolidation here at these recent highs. I like what this pattern's turning into. Like I mentioned in a previous video, I think a week or so of sideways and then another attempt at $60 might get me interested on the long side in GoPro. So I'm watching that one for now. I don't see too much just yet. Alibaba, this one is still crawling to its open gap here from the May earnings release. It seems like it's only a matter of time before it goes ahead and fills this, but I don't see too much with this. It's just a slow bleed lower right now, and it's tough to take advantage of. Need some catalyst here. If it can start to, if something comes up and snaps this this declining trend line that it's been in, might be interesting. Otherwise, I think it's just an avoid until potentially filling this gap. Tesla is the last one we'll look at, and that one again cooling off a little bit today, but still very, very strong, still above all of the fast moving averages, still sort of in chase mode, and hasn't really offered too much as of the past few weeks. So Tesla, I'm still waiting on something more interesting there, but looks great if you're involved in it. Now for some trade ideas for the remainder of the week, I don't have too many actually. WX is the first one. Not my trend line isn't showing up, but effectively I'm looking above 45, 44.60 or so. It's been consolidating nicely. I believe this is all-time highs. Not quite, but very close. And you can see on a weekly chart, we were basically chopping around in this base. We pushed higher back in April, and then we've gone sideways now for a little bit of time. So it looks really good on a weekly time frame. Daily, you can zoom in and really kind of refine an entry to be about that $45. So keep that one on watch. LYB. This one was green today. Still, I think I've talked about this one recently. Above 105.50 is a pretty actionable area for it. This sector seems to be coming alive, this chemical space. Seeing a lot of these show up on my scans that have been in bases for extended periods of time. So could see some more rotation here. Might be a good one to kind of get in front of that. Any type of rotation. GD, this is one, I'm actually involved in this one. We got involved in it, don't know, it was on this candle right here, so in the 142s, but it is still holding up pretty high. It's almost giving us a second entry, so if you're not involved in it, above 146 looks to be a good place to either add to a position or to establish a new one. If you look at a weekly chart, you can see a really healthy, nice looking, clean digestion consolidation pattern at highs with a break to new highs last week. So keep this one on watch. I think this is pretty actionable above all the fast moving averages. And then finally, one short signal, SPLS. This is Staples, and this one this could be going into earnings, I'm not sure, but a little bit of a breakdown here. It's been consolidating very, very cleanly, kind of tight in this $16 to $17 window, and we did see finally a close below it today, down 4.5%. So certainly seems news related. I didn't catch any of the stories behind this, but if you're looking for breakdown plays, 1 or 2 or 3 day holds, this one could be pretty interesting. I'm not involved, but it looks pretty attractive. So that is all I have for today. Thank you for watching. Best of luck trading, and I'll catch you next time.